welcome to VSA Capital 5 Minute Morning Miner on Monday, the 28th of July. Morning, Paul.
Good morning to you.
Yes, and it is not a bad morning. The month seems to have whizzed by, doesn't it? Anyway, there we go. Right, look, it's pretty quiet out there this morning. Why don't we pick one that's a little bit different? We'll do Griffin Mining. They actually are a Chinese, believe it or not, Chinese company, actually in China, but London quoted, and zinc. They've had a bit of an update, Paul.
Yes,
Talk to that
they
one.
did. They just reminded investors here. Just they have been able to offshore money from the operations there in China. Most recently, here this month, they had taken in 16.6 million. This is U.S. dollars, and that's net of the Chinese withholding tax as well. So and they got a similar amount or slightly less at the end of last year. So it just does prove that some companies can, and including mining companies, can operate there in China and offshore some of those funds. I haven't seen the numbers, for instance, for TSX listed Silver Corp as to how much they've been able to offshore over the years, but I would suspect it's even more than that, actually.
Well, I don't know the answer either. Anyway, all right. What else do you want to talk about?
We got the Q2 production results from the West Africa ASX listed Perseus Mining for their gold production here, 121,000 ounces at an all in sustaining cost of $1,417 US. And they have achieved the production guidance for the half year. The average gold sales they had was 131,000 that they'd sold, and the sales price came in just shy of $3,000 an ounce. Cash margin, therefore, around 1,560 dollars an ounce. They did put out the 2026 production guidance here to be 400 to 440,000 ounces, and all in sustaining cost right there around 1,500 or 1,550 or so in the middle range. And they did make the final investment decision during the past quarter to put the Nyanzaga Gold Project in Tanzania into development construction here, and it is anticipated to have its first gold in January of 2027. So, sitting on a nice pile of cash here, $827 million US, no debt at all on the balance sheet, and they have bought back about 73% of their targeted Australian 100 million shares of buyback to this point in time.
That's a nice amount of cash, isn't it? Are
It
those?
is indeed, and particularly for a company that's in the position of actually building a large mine as well.
Yeah, and that is US dollars cash, isn't it? So
It is, yes. Uh-huh.
better than Aussie dollars. There's not much other news, but Paul, there's the back end of last week, the US was talking about trying to prioritize critical mineral recovery from waste. Do you have any comment on that?
Yeah, is an interesting one. That it specifically formalizes the idea that they do want to see the treatment of mine waste in particular in order to recover critical minerals from, and specifically from closed and abandoned operations. And I would suspect that they've been instructed in order to come up with a list or a category list of sites which might fit this category. And I would say that the first place to start might be where they had the list 4 decades ago for the potential of being registered Superfund sites. Because there are a number of mine sites that didn't qualify as Superfund sites, but they were mine waste and smelter sites in the past. In this current list, I would suspect too that they would be adding quite a good number of coal site or historic coal site operations or coal ash sites from
I mean, yeah, it's not just a
utilities.
US thing, is it, Paul? I mean, sorry, I was interrupting. It's not just a US thing. In truth, the reality is technology's got so much better now that whether you want to call it mine waste or tailings, a lot of people can actually go back into this now and actually create some very easy production from just reprocessing waste tailings which has already been mined, and get a bit of cash flow and prove up a project that's still viable. And there's quite a few companies that have started doing it, quite a few companies that should be doing it. That's fair to say, isn't it, Paul?
That is right. It's been done in the gold industry and the copper industry for decades now. But what this does is that it formalizes the permission, I guess, as well as the potential financial support by the U.S. government in this specific case, in order to go after so many of these other types of mine sites of other minerals that had been produced in the past for the same purpose.
Anyway, on that cheery note, we'll call it a day and back tomorrow. Thanks.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.